What's in store for the 2024 housing market? Is this going to be the year that we finally start to see a break in home prices and housing affordability is going to improve? Or is it going to look like the last couple of years where we have inventory problems, competition out there in the market, and home prices continuing to climb upward? Well, that's exactly what we're going to dive into in today's video. We're going to talk about 2024, what's likely to happen in this upcoming housing market so that you can make the best decisions for yourself as a buyer, seller, or investor in this market. We're going to talk about everything from inventory to buyer demand to the number of transactions taking place. We're going to talk about mortgage rates, the likelihood of a recession, along with inflation. And lastly, we're going to talk about where house prices are likely to end up year over year as we break down this 2024 housing forecast. Now, one thing I like to remind everybody on is real estate is local. So depending on where you're located in the United States, you might see a market very similar to what I'm talking about in today's video, or you might see something slightly different. And a lot of it's going to depend on some of the variables that we're going to break down in today's video, primarily being supply and demand. If you're in a market that has a ton of supply of homes and buyer demand's not there, then your market might react a little bit differently than a market that has very, very little inventory and high buyer demand. So you just have to make sure you're factoring that in when you're out there making decisions in 2024. But before we dive into today's video, I'd like to take a minute and ask a favor. If you find any value in my videos at all, do me a favor and smash that like button. Also, subscribe to the channel to stay updated on everything real estate related. Now, before talking about housing specific items in today's video, I want to kind of take a macro view of the economy at the moment and what's likely to happen in 2024. As of today, we have headline CPI numbers, inflation numbers currently sitting at 3.1%, in addition to having core PCE currently sitting at 3.2%. Now, why is this important and why are we talking about it? Well, inflation is one of two parts of the Fed's dual mandate, as they have a goal of keeping inflation around a 2% target. They want to see the economy growing around 2% on average when it comes to inflation. And the other part of that dual mandate is they want to sustain full employment. And the reason we're talking about this is because prior to the pandemic, the Fed had a very, very difficult time getting the US economy to 2% inflation. In fact, it was something they struggled with for the better part of 10 years. They couldn't even get us to 2% inflation. And then we had the pandemic, when the government infused billions of dollars into the economy, in turn driving prices higher. And we saw inflation as high as 9.1%, which in turn is a huge problem for the US economy. And that's when the Fed really started to get aggressive on rate hikes, taking the Fed funds rate all the way from 0% up to 5.5%, which is currently where we sit today. But here's the thing, we currently have a very restrictive policy because inflation is sitting at 3.1% and we have the Fed funds rate currently sitting at 5.5%, which is leading the market to believe over 70% of interest rate traders out there expecting the Fed to start to cut rates as early as March, with the expectation that the Fed will cut rates anywhere between 3 and 6 times in 2024. But here's something that you need to understand. We're currently sitting at 5.5%. So if they cut 6 different times and did 25 basis points each time, that's a 1.5% cut to the Fed funds rate, taking us down from 5.5% to 4%, which is still a very restrictive policy because as of today, CPI is currently sitting at 3.1% and likely to continue declining going further. In fact, if you look at this chart here, we currently have 1.3% of our current 3.1% inflation falling off between January, February, and April of 2024. So what's going to happen is we're going to replace these higher numbers with lower month-over-month numbers, probably somewhere around 0.1%, which means we're going to drop nearly 1% of inflation by April of 2024, giving us a read somewhere around 2.1% on headline inflation. And the reason I'm pointing it out is because even if the Fed does cut rates by 1.5% in 2024, if inflation drops all the way down to 2%, we're still going to have a super restrictive policy because we're still going to be sitting nearly 2% above where we're likely to be on inflation. And the primary reason we started talking about the Fed and inflation to start with is because what the Fed decides to do in 2024 is likely to have a large impact on the direction of mortgage rates and in turn the direction of home prices. So while at the moment the Fed is currently baking around 3 interest rate cuts into the cake, I think the Fed is likely going to end up doing more than 4 just because of how restrictive policy is going to be, as inflation is likely to continue declining, as we've discussed in earlier videos. Now the next question that comes up is, are we headed for a recession because of this super restrictive policy? Well, at the moment, employment has stayed pretty resilient considering everything happening out there in the economy. But here's the thing, employment is likely going to continue getting worse. Now, is it going to get so bad that we headed into this deep, dark recession? I don't believe that to actually be the case. I do believe that we're likely to have a recession sometime in 2024, probably starting sometime around mid-year. But with that, I do believe the idea of a soft landing in the economy is actually possible at this point. Now, if you would have asked me that 6 months ago, 8 months ago, I would have said the answer is no. I don't believe there's this opportunity for a soft landing. But now, just based on inflation coming down, the Fed starting to pivot, starting to change their stance a little bit, and employment still remaining strong, I do believe there's an opportunity for a soft landing in the economy. Now, because the Fed is likely going to cut rates like we've discussed, and inflation is going to continue to moderate, I believe that mortgage rates are going to continue to trend down. Now, at the moment, when we're filming this video, 30-year fixed rates are sitting somewhere around 6.5%, which is about 1.5% off the highs that we saw back in October of this year, around 8%. Now, that was a 23-year high. But the real question is, how low can mortgage rates go? Well, it really depends on who you follow out there in the market. At the moment, you have really smart people out there thinking that rates could see a 4 handle by the end of 2024. Now, here's what I'll say about that. I'm not sure how realistic that is, but in order to see a 4 handle on mortgage rates, you need more bad news in the economy. You need inflation to continue to plummet lower. You also need the Fed to get even more dovish out there on monetary policy. In addition to likely seeing breaks in employment, you need to see employment start to get worse. You need to see unemployment rise. More signs that the economy is headed towards a bigger recession will likely lead to lower mortgage rates. Now, a moment ago, I mentioned I don't believe that we're going to see this deep, dark recession, which tells me that mortgage rates are probably going to continue declining somewhere around the mid 5% range, 5.5%. Now, with that, there's going to be volatility in that market. Some reports are going to come out month over month and show that the economy is doing well, and that might send rates a little bit higher. And then you're going to have some reports that show the economy is doing worse. And with that, rates are likely to improve a little bit. You're going to have some bouncing around. So my guess is for the better part of 2024, you're going to see mortgage rates somewhere between 5.5% and probably 6.25%, which is a significant improvement over 2023, but it's not to the levels that we saw back during the pandemic. In fact, I don't think we're going to see those levels again anytime soon. But here's the thing, interest rates alone can't drive the housing market. As we've always discussed, supply and demand is what actually drives housing. It's what drives prices, it's what drives transactions, and so that's exactly what we're going to talk about right now. Typically, we start the year with the lowest level of inventory that we see that year, and as we progress through the year, we start to see inventory levels rise, and that's exactly what I expect to happen in 2024. I expect 2024 to start with a higher level of inventory than we started the year with in 2023, but not by a significant amount, not enough to change the dynamic of the housing market. Now, with that, inventory is likely going to continue improving through the spring season. Now, this is something that we typically see every single year. It's just that time of year when most people put their homes on the market. In fact, most sellers know that the spring market is when they can maximize price, when they'll get the most money for their property. And 2024 is not likely to be any different. But inventory doesn't really start to increase in the new year until you get sometime around the first or second week of February. Now, last year's market was a little bit different because we didn't really ever see that pop in inventory, but 2024 is likely to be a little bit different. I think you're going to see inventory levels rise a little bit because mortgage rates are going to come down. Now, you have a lot of sellers sitting on the sidelines in super low rates looking for an opportunity out there. Now, I realize a lot of people go, who is going to sell their 3%, their 4% home and buy something with a higher price, a higher mortgage rate, and ultimately a higher monthly payment? Well, the majority of them aren't going to do anything. They're going to stay put in their properties. But with that, I know there's a lot of people that bought properties during the pandemic. Prior to the pandemic, they refinanced into these super low rates, and they absolutely hate where they live for a number of reasons. Maybe the property no longer fits what they needed. Maybe they never really liked the location. Maybe they bought it out of desperation because things were moving so quickly. They just wanted a home and then got in there and realized it wasn't what they thought it was. Or maybe they didn't plan ahead. Maybe they didn't get enough bedrooms for a growing family or buy in the right school district or whatever the reason is. So there are a percentage of people out there that are looking to take advantage as mortgage rates come down. And so with that, you're going to see some more inventory coming to the market. But as we've discussed before, most of these people putting their homes on the market are also taking one off the market. So they're a seller, they're adding a home to the market, but they're also over here buying one and taking one off. So with that, inventory doesn't actually increase in those cases. In order to see inventory increase in any meaningful way, you need sellers coming to the market that are putting a home on that aren't taking one off. You need a seller that maybe has multiple homes and now they're looking to liquidate one or two, or you need somebody that maybe had a death in the family, or there's a divorce and they have to sell a property and they're not necessarily going out and buying another property. This is how inventory gets added in addition to new construction. But the reality is none of that I just talked about is going to add enough inventory to the market to change the dynamic of the market in 2024. So yes, inventory is going to increase and it's likely going to continue to grow all the way through midsummer, which is normally what we see. That's historically the trend for real estate. We see inventory grow all the way through midsummer. And then as we move into the fall winter market, there's less properties on the market. People start to take their homes off because of the holidays, because the kids going back to school, just all of those things. We're starting to get back into that more cyclical trend of real estate that we've seen over the last 60 plus years here in the United States, which means inventory is going to grow. There's going to be more options out there for buyers, but because so many people have locked in low rates and because affordability still remains a huge problem out there in the market, I don't believe you're going to see a ton of new listings come to the market, which means inventory is probably going to be sitting somewhere north of those 2023 levels, but nowhere close to where we were prior to the pandemic. Now, the other part of that equation that drives the housing market is buyer demand. Now, demand is likely to pick up as we move into the new year, as it always does. Now, part of what's going to add to the demand this year is that mortgage rates are going to come down, which is going to improve housing affordability. At the same time, home prices aren't going to shoot through the moon like they have in years past, which means that improvement in mortgage rates is actually going to help affordability. And along with that, you're going to see increase in wages in 2024, which means you've got two of the three components out there helping housing affordability. But with that, housing is always made up of two different parties, the willing and the able. Almost everybody out there is willing to be a homeowner, but you only have so many able buyers out there in the market, those that can actually qualify, can afford the mortgage payment, that have the down payment, that have the credit, that have all of those things. And with that, you have a limited supply of those people out there because of the overall dynamic in the market. So I do believe demand is going to improve, but we're not going back to 2020 or 2021 levels just because of where housing affordability is. Now, because you're going to see a little bit of an increase in supply, you're going to see an increase in demand. I do expect the number of transactions in 2024 to go up. But I don't think it's going to go up in a significant way. I don't see the 25-30% increase that a lot of people out there are calling for. And the primary reason for that is because I don't see inventory coming to the market for people to be able to buy in a meaningful way. I don't know where this supply is actually going to come from. In fact, that's where I want to ask you, as a viewer, where is inventory going to come from in 2024? Unless we see interest rates go back down to 4%, which isn't going to happen in my opinion, you're not likely to see enough inventory come to the market to flood the market. The only other thing that would change inventory would be that if you saw a bunch of distressed sales, a bunch of foreclosures, a bunch of people that could no longer afford to keep their homes. And at the moment, you have homeowner equity still sitting near a record high, employment remains really strong, and foreclosures are still sitting near record level lows. So the idea of distressed sales coming to the market and changing inventory isn't realistic either. So as somebody out there watching this video, where is inventory going to come from? Now, the last piece of the puzzle that I want to talk about in today's video for our 2024 housing forecast is house prices. Where are house prices headed in 2024? Well, your guess is really as good as mine. A lot of factors have to fall into place in order for a projection like this to actually work out. But I believe 2024 is going to look a lot like 2023 in many instances. I do believe there's going to be more transactions out there in the market. It's going to be a little bit more inventory. You're going to have an improvement in rates and inflation and all of those different factors there, which in turn is going to give more buyers an opportunity. But because of affordability and the things that we've talked about, I believe there's a ceiling on how high house prices can actually go. So I'm thinking 2024, you see home prices increase somewhere probably between 3 and 5% in most areas across the United States. So for all of those people out there wondering whether you should buy now or wait, this is what you need to factor into your decision. The likelihood of home prices going lower and mortgage rates going lower and all of these things going lower to really improve the overall picture isn't likely to happen. But the likelihood of mortgage rates moving lower, house prices remaining stable, either where they are right now or going up slightly, is more realistic. But that's what you need to be factoring in when making that decision of whether or not you should be buying in 2024. At the end of the day, buying is a personal decision. As a real estate agent, I tell people all the time, you have to buy when it's the right time in your life and make those decisions based off how long you plan to live in the home, how much money you have in the bank, being comfortable with the monthly payment, all of those different factors, and not basing it off something that you believe to happen in the future and when and if that happens, then you can do this or can't do that. That's not the way to think about this. But with that, if I can be of assistance to you in your journey in 2024, do me a favor and reach out to me directly. And if you want to know why I think you should expect the unexpected when it comes to 2024, do me a favor and check out this video here.